we have arrived at the last lesson of this mentorship, and we're going to be talking about funded accounts, how to pass them and how to retain them. So how do we pass and how do we keep those funded accounts, right? As we all know, phase 1 of most prop firms is 8% profit target and phase 2 is 5% profit target. Now, depending on the prop firm, you have a either 10% max drawdown or 12% max drawdown, and most of the time the daily maximum drawdown is 5%. But we don't want to risk 5% in a day, right? So be sensible. Our objective is to win 2 trades in a row, and this risk management plan is framed around the different models taught in the mentorship and assuming you follow all the rules. Our objective with the first trade is to get a 2 to 3% buffer on the account, and then we're gonna risk 2%. So phase 1, right, 8% profit target. Option number 1, how are we going to do it? When we are break even or we are starting out the account, we risk 1% and then we aim for a 1 to 2. Don't go be aiming for 1 to 5 or 1 to 6. We want to go and build up our buffer first, right? So a 1 to 2 for a 2% buffer. Now for a second trade, we risk 2% and then we aim for a 1 to 3, and that would be 6%, right? So with 2 winners you can get a phase 1 passed with 8%. If at any point we are back at break even, we risk 1%. So at any point when we are below break even, we risk 1% or less, and we don't risk more to catch up, right? Because then if we take another loss and we go risk 2% or 3%, we go even deeper in drawdown. Option number 2. When we're at break even, we risk 1% and then we aim for a 1 to 3. So then we have a 3% buffer to start off our account, right? For our second trade, then we risk 2% and then we aim for a 1 to 2.5 R, making 5%, right? So again, with 2 per trades, you pass that 8% phase 1 profit target. If at any point again we are break even, we risk 1% again, and if we are below break even, we risk 1% or less and never risk more. Now for phase 2, option number 1, at break even, again we risk 1% and aim for that buffer, right, at 1 to 2, so we have a 2% buffer. Then for a second trade we risk 1% and then aim for a 1 to 3. Now you can see this is a little bit more conservative, right? Because on phase 1 you have to have 8% profit target, which can be a long climb if it's not done properly, but this 5% is a little bit easier to attain, so there's no risk to risk 2%, right, for option number 1. So risking 1% to go for a 1 to 3, getting that 3%, and then you have that full 5% phase 2 passed. Again, at any point if we are break even, we risk 1% again, as always, and then if we are below break even or we are in drawdown, we risk 1% or less and never risk more. Option number 2, at break even we risk 1% and then we aim for a 1 to 3, right? So we aim for that 3% for our first trade, and then for our second trade we risk 1% and then aim for a 1 to 2. So that should be a pass on your challenge account in 2 trades once again. If you're at any point at break even, risk 1% again, and if you're below break even, risk 1% or less and never risk more than 1%. So now that we've attained that live account at break even, we risk 0.5% and then aim for a 1 to 2. Now we have a 1% buffer, right? So for a second trade, now we can risk 1% and then aim for a 1 to 2 or a 1 to 3, and that depends on the trader's strike rate. Once you reach about 2 to 6% on your live account, leave it, because we move on to the next account. Once a live funded account reaches that 2 to 6%, you can wait for your payout, get your challenge money back, and then you can move on to the next account. And this is how you build up your capital.